traders, Cousin Vinny coming to you on December 21st, Sunday, from closingprint.com with a look at the week ahead. Remember, for you new traders, there are plenty of videos here for you to help hone your skills and things to study up on and perfect your tool set for the year 2015. So spend some of your Christmas checking out some of the videos we have here and the other strategies and resources that we have on the site. Watching the spiders, which went ex-dividend on Friday, there is a slight downward skew of about $1.13 or $1.15, I believe. So without that ex-dividend, more than likely we would be at highs or just below the highs that we saw on December the 5th, I believe, was this high here. Because December the 8th was Monday, and that's when we got our sell signal on this divergence in slow stow, the bear divergence, as well as this crossover on the long-term MACD. Since then, we bottomed on Wednesday and we had two back-to-back 2% days. Actually, Thursday, I believe, was 2.5%. We gapped up and then we put in a doji on Friday. So we are watching this doji to see how it is perceived by the market. Currently, S&P futures are trading +2 at 2067.45. One of the things that we mentioned on the weekend blog post for the 401k review was the thought that if we put in higher highs again, and you can extend this trend line out, if we put in higher highs and we don't put in a higher high on slow stochastic, that in effect is a bearish divergence and one of the only signals that George Lane used as a signal to buy or sell. So that was one of the things that we used on the sell signal on December the 8th on the spiders. So keep that in mind, that we had this slow stow divergence. If we don't get back up here and take out this high here, we will have another divergence setting up. And we'll also be watching the short-term MACD histogram as well as the long-term to see if we do a double dip here, similar to what we did here. Obviously, we came down pretty far, but that's what we're paying attention to going into the week. We think we'll probably make new highs with weakness in Russia, China, India, Japan, and possibly in Europe, as we mentioned in the 401k review blog post. We should continue to see money flowing into U.S. equities. The NASDAQ composite looks pretty much the same. Note the volume that we saw on Friday, and MACD histogram and MACD is about to cross back over its signal line, with slow stow getting into the 80 region. So we'll be looking for this for a higher high as well, not a lower high, which would produce a divergence if we get back up here to this upper Bollinger Band, which is highly possible going into year end. And then we're looking for some consolidation and a possible move off of that level to give us a better entry going into the first quarter earnings season. The Dow Industrials Index of 30 leading stocks. Remember, we had these three divergences, higher highs on the industrials, but lower highs on stochastic. I've been focusing a lot on this. For signals, we saw prices move lower shortly thereafter in all three cases. We're watching for a similar setup going into this week. Note the spinning top that we saw on Friday. This is where we got our sell signal on December the 8th as well. We got our buy signal on Wednesday, along with slow stow mirroring the buy setup on MACD, the 514.5, which is what we use for our buy signal. We use the longer term for sell signals as per Gerald Appel's book, where he talks about using a longer term MACD in this case 1939.9, to keep you in a trade longer. And a chart of the Russell 2000 small cap. Note the highs over here at 11.95.94 and the close at 11.95.94 on Friday. Very interesting. We've been this small broadening pattern over the last 6 to 7 weeks. We're breaking above that level and Bollinger Bands are expanding at the top, and it looks like they're fairly flat. They're fairly flat on the bottom. If these expand at the bottom and the top, we would expect to continue to see increased interest in the higher risk on trade going into year end. And looking at the US dollar, as I mentioned previously, with the dollar strengthening and the Russian and Chinese economies appearing to be contracting, as well as India, we are looking for the US dollar to continue to strengthen and possibly break above the 200 period moving average here, which is at 89.84 presently, right where we closed, 89.84. If we break above that level, then we have some resistance levels noted with the dashed horizontal lines. Note RSI, similar to what we saw back in the late 90s, running up into the year 2000, 2001. So keep an eye on the US dollar going into the first quarter of 2015. So now let's take a look at our indicators, tick cumulative, which if you've been following us for the past several months, we've been increasingly watching this for signals and to help us keep with trends as well as look for or anticipate changes of trend. We almost saw a crossover on Friday, but we did push off of the 10 EMA. Elder Impulse, 2 green sticks as we would expect, and with NYMO starting to push higher and trend staying low, we've seen a lot of buying on Wednesday and Thursday. It appeared when we had corresponding plus 1,000 plus negative 1,000 ticks that what was happening is on the negative 1,000 ticks, it was perceived that institutions were selling their losers, and on the plus 1,000 ticks that followed back to back on a 5-minute tick, that institutions were buying stocks they thought would be winners going into year end. This is a chart of WTIC, light sweet crude, and weekly. Although it's not an indicator, what we are watching is this doji that we put in on Friday, a long-legged doji actually, and this Kirby pocket. It looks like there's some indecision, so we're watching for a possible turn to the other direction, slow stow turning back up, and MACD turning as well. So as this being a barometer of selling recently, a catalyst for selling, we are keeping an eye on crude, as I'm sure many of you are as well. With NYMO positive over the last week, when we hit that minus 84 intraday, at the market bottom we saw minus 84, and we anticipated that we could see statistically a turn to the upside over the next several days, which is what we got. So with these positive readings, you'll also see NYSE crossing back to the upside. And that's what we're seeing. We're about to get a crossover to the upside if futures continue to push higher going into tomorrow. It's currently plus $2.20 on the ES futures. Okay, so with that, we want to look at some setups going into the week. So if you're a Stock Charts member or not, you can come here and check sector summary down below the chart. And ranking by percent change, we see that energy had the best performance last week. So we'll watch the energy sector. I've already gone through this, so I know that there's some good setups in here. If we look at oil equipment and services, there's several names in there. Note the Dow Jones symbol. We'll check here by going to our chart lists for energy subsectors, going through 10 per page, and we can very quickly check out the coal index. This is an hourly chart. Note, nice pattern here. Basing, we're crossing over, moving to the upside. We have this Kirby pocket on the hourly. If we look at the daily, note that we have this nice descending pattern. We have a little Kirby or volume by price bar to deal with, but prices should move to the upside. Oil equipment and services, nice descending pattern here. We don't have resistance until we hit the 620 volume by price bar. We're bouncing off of this lower level here above the 10 period EMA. MACD is giving us a cross, and the histogram is pointing to continuation upside. Slow stow has already gotten to oversold, but this is the 5-1, so the 14-1 should be starting to get to overbought, and we'll be looking for more upside on stocks in this group: oil, equipment, and services. Integrated oil and gas, you can see that we had quite a move over the last 3 days, and we have resistance coming up as well as this volume by price bar. Exploration and production, we have some upside still that we could see to this upper trend line. We have a volume by price bar here. So look at these stocks in this group: U.S. exploration and production. Note MACD. I've put an arrow here only because this is an indication for me that I want to keep an eye on MACD histogram. Pipelines looks very good. I saw a couple of names in this group that looked good. We have the 200 period moving average, which is still upsloping, and the 50 period, the green line, is starting to flatten out and looks like it's going to turn back in the other direction. Prices are above the 10 EMA. We'd look for maybe some consolidation, but this could continue to push higher as more traders start to notice that it was being bought up over the last 3 days. Note the volume and MACD histogram suggesting there could be more upside. Renewable energy, note the nice little tight wedge pattern. This could break higher. Be watching this on Monday for stocks in this group, as well as the industry group itself. If we get back above the 50 period moving average, all of these averages should be turning back up respectively. Basic energy services, I'm watching this one. In the oil and equipment and services group, note this big Kirby pocket between these volume by price bars. We had a nice candle on Friday. We're looking for a continuation here with MACD giving us a cross. Geospace Technologies, also in the oil equipment and services group. Nice descending channel. We're watching for a breakout here. And this Kirby pocket for things to get interesting very quickly. Note MACD is giving us a cross here, and histogram is indicating that we could see continued upside for at least the next couple of days. So watch for a breakout here on GEOS. Nabors Industries, looking very good here. Note I've highlighted the Kirby pocket so it's a little bit easier to understand what I'm talking about. If a volume by price bar here, then we don't see sellers until we get up to around $15 per share. That could dissipate very quickly and turn into short covering up to around $16.50. No Bollinger Bands on the top are compressing, and the other is coming back up. The lower is coming back up. Note the volume, and also note the MACD cross on Nabors Industries. Pacific Drilling, PACD, another one with a nice Kirby pocket here. Volume by price bar, resistance up here around 650. We're looking at stocks like this possibly for a quick scalp if we see a lot of interest and money flowing into this early, and get out of this early on. Obviously it's a cheap stock and it's very risky, but there's a lot of interest in this group, the oil equipment and energy services. MACD cross, note the MACD histogram, and slow stow looks like it's going to continue to move higher. So this is a cheap name. We might throw a few 100 shares, maybe 1,000, and try to scalp a half a point to a point on this one tomorrow. Parker Drilling, PKD, this one looks good as well. Resistance up here at the $4 mark with this volume by price bar. Also a previous support area that was lost in late November. Note slow stow is turning back up and moving higher. This is 5-1, so 14-1 should be around here somewhere. MACD histogram cross. Also on Parker Drilling, make sure you check out Nobel Energy. That's NE. Let's take a look at that chart. NE looks pretty good, I'm sure. So you can see the volume that came into some of these stocks in the oil equipment and services group. This volume by price bar up here at 25. I'm not suggesting that's where we're going to be in the short term, but we do have a little wedge that we broke down out of, so we might see a back test of that around 21, 22. MACD is giving us a cross, and histogram is positive as well. So that's typically what we do. We will go to Investors Business Daily, check out a stock in a group, and then see who's the leader in the group and check out the numbers for a particular stock that we're looking at. Okay, so this is Cousin Vinny coming to you from theclosingprint.com. For you new traders, be sure to check out these top 5 or 6 videos, which will give you a better edge on understanding the markets, taking setups, and where to position yourself for the highest risk reward on your trade. In addition, if you don't subscribe to the blog, this is a spam-free site. Enter your email address in here and you can get these delivered to your email every day. You'll note my tweets are here, the watch list for the week or the day. You can just scroll down through these to keep in track of the trades that we're looking at, whether they're high type flags or Bollinger Band setups. It's also a place for me to document the trades and thoughts going into the weeks. So I hope this helps. Take care. We'll talk to you on the stream on Monday.